Hello, this is Kirill from forexboat.com and welcome back to the course on money management. And in today's tutorial, we will look at an example of how to apply the Kelly criterion to a real Forex strategy. So here's our strategy in front of us. The take profit is 20 pips and the stop loss is 40 pips. And these values already include any spread and commissions. And also from our trading history, we can see that we have approximately 70% winning trades, give or take some. So now let's see how we would apply the Kelly criterion in this case to find out what our optimal investment in terms of percentage of our account should be to maximize our profits in the long run. So here's the Kelly formula. As we remember, K is the percentage of risk that we're looking for, P is the odds of winning, and B is the payout on the bet, or in this case on the trade. So in our case, P is equal to 70% or 0.7 and B is equal to 20 divided by 40, and that means 20 is our stop loss, 20 is our take profit and 40 is our stop loss. That's why we're dividing one by the other. So if we calculate this, then we'll get 0.7 times 0.5 minus 1 minus 0.7 divided by 0.5. Now we continue the calculations, and at the top we get 0.35 minus 0.3, and that gives us this result. And when we divide one by the other, we get 0.1, which means that our Kelly is equal to 10%. And this means that if we want to maximize the output of this trading strategy in the long run, we should invest not more and not less than exactly 10% of our account on every single trade. Now, as we discussed, the half Kelly provides a more kind of stable investment. It reduces your risk by 50%, it reduces your return only by 25%, and it reduces your volatility by more than 50%. So it's a good trade-off, and personally, that's what I would do. I would go with the half Kelly, and in this case, the half Kelly is 5%. So depending on your approach to risk-taking, if you want to be more aggressive, you would go with the Kelly. If you want to be a bit more conservative, you would go with the half Kelly. But more importantly, you would never, with this trading strategy, you would never go above the Kelly and never invest more than 10% into any given trade, because that means that in the long run you will not be achieving your optimal outcome. You'll be either over aggressive or you'll be in the insanely aggressive zone, which means you'll be losing money. So that's how you apply the Kelly criterion to a real Forex strategy. That was just one example. Any Forex strategy can be analyzed in that manner. Next steps would be to draw up the Kelly chart and kind of understand where exactly everything lies. But as you can see, it's quite simple. So that is also a very great advantage of money management, that you don't have to put in that much effort. As soon as you know these things, you just quickly do the calculation and you see if you're on the right track or not. Hope that was useful, and I'll see you next time. Until then, happy trading.